I received an email from Pearler team the other day, which is one of the online brokers that I use. They have launched Pearler Headstart to invest for children. In this video, let's talk about this app and compare with Vanguard Kids, and there are other considerations that you may think about before you use either of the platform to invest for your children. My name is Irene, let's get started. The setup of Pearler Headstart is pretty straightforward. If you already have a Pearler account, after you log in, your kids account will be automatically linked to your own. After you add your kid's name, you will see a pop-up window to give two options to invest. One is to invest on behalf of your children. Number two is to invest with children in mind. If you want to know the difference between these two types of investing and their different tax treatments, you can check out my previous video about Vanguard Kids account after watching this one. I'll put the link down below. The next step is to choose the investing goals for your children. Then you will see their pricing structure. For balances below $100, there is zero management fee. For balances that is more than $100, if holding one fund, the fee will be $1.70 per month. If holding more than one investment option, you will pay $2.30 monthly. To make a comparison, Vanguard Kids account doesn't charge any account holding fee. So it really depends on the management fees for each investment option, which are deducted from the fund's returns. Say we have a balance of $50,000 at the beginning of the year to start with, and we contribute $5,000 throughout the year for each investment option on Pearler Headstart. How about Vanguard Kids account? It sits somewhere in the middle with about $160 per year. In terms of the actual investment products, Pearler offers 10 options while Vanguard Kids only offers 4. The biggest difference is that each of Vanguard's options is strategically diversified with bonds and shares. Even within bond, there is global bond, Australian bond. Within shares, there covers international, Australian, emerging markets, even international small companies. While the only diversified option in terms of asset class that Pearler offers is Diversify and Chill, which coincidentally is the same fund as Vanguard's High Growth, and all the rest are equity funds. Of course, you may argue that for children who has much longer investing horizon, 100% shares is the way to go, which I totally agree. And Pearler absolutely has more options, from the popular combo VAS-VGS to ESG solutions, from S&P 500 to even thematic funds like ACDC and Better Future Active Managed Fund. And there are many choices on the plate. Before you jump into it, one last thing that I need to point out is that by investing in either of the platforms, you are investing in a fund as a micro investing format. And this means that you can't take them with you to other brokers as freely as your other chat-sponsored ETFs. So when you get your head spinning by comparing the pros and cons of investing for your children, either through an informal trust or fully under your name, you should also consider this. It's kind of like our super funds. When you want to switch super from one to the other, you will need to sell all the assets and buy new investment products in the new fund. However, the beauty of investing into these micro investment products is the minimum contribution is low. You can invest as little as $1 on Pearler Headstart or $25 minimum into Vanguard Kids account. I hope this video can save you some time in choosing an investing platform for your children. If you have already started using Pearler Headstart or Vanguard Kids account, I would like to know how you think of them. My name is Irene. I'll see you next week. Bye.